Well, hello and welcome. Thank you guys very much for joining me here, and let's have a look at what is going on in this crazy market. Well, we're getting treasury yields dropping, and that makes sense when we're seeing treasuries moving higher, right? They move inversely to one another. Why? People are panicking, getting out of the stock market and into what's considered more safer investments like bonds. So that's something that we're seeing. There's a lot of fear going on in the market right now, but if you have a look at what's going on with the actual market and trade what you see and not what you think, and don't give in to the fear and the mass media and their play on things. If we look at the actual chart, when we look at our opening range. So we've got the high and the low of the first trading day, as you can see on the box on the left. The first trading day of November, the high and the low of that day represents the opening range. Now, as we're speaking right now, we're neutral. We're still above the Ichimoku cloud that I like to use, and we're within the range. So we're very neutral right now. Okay, nothing particularly bearish about that at this point. Okay, now the SPX put call ratio, if it gets above 2.75, then that would show excessive put buying, and we may see things start to move higher. Right now, that's neutral. Combined put call ratio right now, when we look here at the 10-day moving average, which is this blue line here, is at 0.92. Something above 0.95, getting closer to 1, shows that there could be a bottom in the market as well. Excessive put buying, excessive fear, no one left to sell, an insanity point. We're not seeing that right yet, but we're close, but we're not seeing that right now. The skew, the perceived risk of a 2 standard deviation move or more to the downside of the market, in other words, market crash, anything above 135 is showing that the smart money is concerned about a market crash. So that is bearish, okay? And the trend, which is probably the most accurate overbought, oversold reading on the market, if it was above 2, that would be showing me extremely oversold, looking for the markets to move higher more than 90% of the time. We're not seeing that yet, or something under 0.5, you'd be expecting to see a bearish day the next day or so. But right now, that's neutral as well. So the opening range is neutral. Many of the key indicators we're looking at are neutral right now. And some of the other things that are going on, if we have a look here at Bitcoin, so if we look at the Bitcoin here compared to the USD, we can see right now that it has had a pretty decent fall. We're sitting at just above 49,000 right now, but we did go as low as 42,200, where are we? 333. Yeah. So pretty dramatic move to the downside. This has taken out a lot of the weekends. It's taken out a lot of leverage, that's for sure. Huge amount of leverage has been squashed here. Breaking below this upward trending trend line here, took out 50,000. Took out 47,500, which is another significant level. We took out 45,000. So a lot of stops being taken out. A lot of people with leverage have been taken out. Let me give you a bit of an idea about how much liquidity has been taken out here. There's a whole cluster of things going on right now. We've got the Evergrande, the fact that that's illiquid. We've got people that are going risk off, going into the bond market. We've got certain key insiders that are selling stocks, mainly just to take profits from significant rises that they've seen. The fact that the Fed could taper going forward. There's fear that they could do that and raise interest rates to combat inflation. All-time high valuations. Inflation itself at 30-year highs. Weak jobs report just recently. So a whole cluster of things coming together. But if this new Omicron variant does lead to a lockdown, that would play right into the Fed's hands, wouldn't it? Right? We don't have to taper. We're certainly not going to raise rates at that point if that does occur. Let's hope that it doesn't, obviously. But there's a whole range of things going on here. Okay, there's a lot of fear in the market right now, and for me, from a point of view of looking at this from a point of view of Bitcoin, well, $4.4 billion worth of futures open interest has been wiped out, right? We've seen a big move down in Bitcoin, big move down in the futures market as well. That is really the smart money, the institutional money, the big money, taking out the weak hands, taking out the people that are leveraged up, people that have small accounts and have leveraged up 10 times, 20 times, 30 times, trying to make a home run trade. Guess what? They just liquidated all of them. Okay, you either got a margin call or put money into your account to get the loan to value ratio back to where it should be, or you were simply forced to liquidate, or they liquidated for you. So this is what happened to a lot of people, and this is what happens a lot of times with Bitcoin. You see a big move down before a big move up, and you get all the weak hands being taken out. Maybe this takes a little longer to play out than what I initially thought, but right now, I think there's some games going on here, and flushing out all the leverage before they take it higher is my best educated guess. So that's what's going on there, but from our perspective, we're still in a neutral market for now. Now, that could change. I'm not saying we can't sell off. I'm just saying right now, that's not what I'm seeing. So I'm very disciplined in trading what I see and not what I think. Right now, though, if we look here at the implied volatility in the overall market, the implied volatility, which is this gold line, is much higher than the historical volatility, which is the blue line. So we've got a lot of fear going on in the market, which means the implied volatility is very high, which then means that options are expensive. Okay. Now, when options are expensive, you want to sell them, not buy them. So there is some pretty incredible opportunities to get quality stocks that have sold off dramatically at discounted prices, again, even further discounted prices than what they already are, that are stocks that are oversold, and be paid a very nice premium because of the fact that the implied volatility, the fear in the market is so high. Right? So it's actually some pretty good opportunity. So what am I doing with this move down and this fear that's going on right now? I'm going shopping. That's what I'm doing, right? So that's what we're going to look at here. Now, some of the areas that I'm going to be shopping in is Marathon Digital, right? So Marathon Digital has moved down with Bitcoin and everything else. But what I'm looking to do here with Marathon Digital is this. So I'm going to agree to buy Marathon Digital all the way down at $30. So below the 200-day moving average, down here at $30. A pretty good support level as well. So right now the stock's trading at $41.64. I'm going to agree to buy it at $30, and I'm going to be paid day one. So let's have a bit of a look at that. So let's have a look at this. I believe that by the beginning of 2023, Marathon Digital could be worth $113 a share. Now, we've already had a great winning trade on this, okay, last month by selling the 40 strike put. What I want to do now is sell the 30 strike put. So I can bring in $1 and $2, or $102 for selling one contract, and I'm only doing this for the next 12 days. So have a look at this: a 3.4% return in 12 days. So if it finishes above 30, I will keep the $102 for every 100 shares I'm agreeing to buy, and I'll make a 3.4% return. If it finishes below 30, I still keep the money, but now I buy the stock at 30 with a cost basis of $28.98. So I think that's quite a nice trade there. Now, another stock that has had a big move down is Hut 8 Mining. Now, Hut 8 Mining approaching that oversold here when we're looking at the RSI, right? Something below 30 or close to 30 would be oversold, and something above 70 would be overbought, right? Just as a guide, because things are selling off so much. So, pretty big move down. I mean, it got as high here as $15.40. Okay, sorry, $16.57, should I say, and is now down here at $9.37. So what you could do right now is go shopping with this stock, and you could agree to buy it here at about $7.50. Okay, so I'm going to agree to buy this stock here at $7.50. Okay. And let's about right where the 200-day moving average is. So right now, let's see what that's actually offering as far as, so for the 21st of January, 47 days from now, if we come over here and we sell the 750 put, Okay, so that's bringing in around, let's just say 93 cents, right? So if we go in here around 93 cents, so that's a pretty good premium there. 94, 93, yes, something like that. Say 93 cents. If we could get fill there, think about this. If I agree to buy this stock at 750, okay, so I'm agreeing to buy $750 worth of stock, and I get paid $93, okay, for agreeing to buy the stock, that's a 12.4% return for agreeing to buy the stock at 750, significantly lower than where it is right now. Okay, so I like that a lot. Okay, so you could sell the 750 put right now. Now, Hut 8 Mining, I'll just show you this briefly, is still doing very well, right? I'll just show you this. Yeah, mines 9 Bitcoin a day. So 265 just in November by itself. So I still like it. And if I could get it down at $7.50, and I could make a 12.4% return, right? That's a pretty good deal, right? So I'm going shopping there on Marathon Digital and Hut 8 Mining. I do like the look of both of those going forward. Now, there is another one here that if you don't have this position, I'll just show it to you here on TradingView. APPS, very good, fundamentally sound company, massive sell-off, no doubt about that. But you can see here last time that it became oversold, okay, below 30 on the RSI, it went from around 48, where it is now, to $90. So I think at this level, if I just get a little more data here, so you can see that's a pretty good level down there at 40. So if I could sell the 40 strike put option right now on APPS, I think that would be a pretty good deal. Very oversold right now. Good quality company, fundamentally sound, generating good returns, revenues, growing their earnings, all that type of good stuff. That would be a good deal, right? So that would look something like this. APPS. Okay, Stock Smart. Yep. All right, yes. Okay, now, if we look at this, if we say, take it to January, let's have a bit of a look. All right, so I think selling the 40 strike put for $212 a contract looks pretty good to me. Let me just have a quick look at December, see if there's any. That's not bad either, right? You could sell the 40 strike put for 68 cents a contract. So that's pretty good also. I mean, you have a look at this. If I click on bid, so I'm going to sell the 40 strike put. So about 68 cents, right? So if we could get $68 a contract for agreeing to buy it down at 40, what that would mean is we get $68 for every 100 shares we're agreeing to buy, okay? So if we put in here 0.68, okay, 0.68, divide that by the price you're agreeing to buy it for, 40, that's not a bad return. 1.7% return for 12 days. Now, obviously, Sunday is not a market day, so it's actually 11 days. 11 days, a 1.7% return for agreeing to buy a stock over $10 cheaper than what it currently is. If we own it at that level, it's fantastic, right? So that's another place where you could go shopping as well. So I like Hut 8 Mining, Marathon Digital, getting them at heavily discounted prices, elevated premiums. So we're getting really good amounts of money here for agreeing to buy these at a big discount. And we're going shopping, right? Stocks are selling off. They're oversold right now. A lot of fear, a lot of elevated option premiums, which we love. We're getting premiums in the door day one, agreeing to buy good quality, fundamentally sound stocks at discounted prices to what they're trading at. We're getting paid and we're making some very nice returns as well. So they're just a couple of ideas that I'm looking at, and we're managing our trades. There's a whole range of trades that we're managing right now. We're agreeing to buy a lot of them at discounted prices positions, even stocks we're already in. We're going back in and trying to buy some more and getting paid for it. So there's a whole range of things we're doing with our members right now, doing very, very well, managing their position, managing this crazy market that we find ourselves in. So let's see what the market gives us moving forward. But at this point, I'm looking to buy great quality companies, getting paid up front, and that's what we're doing right now. So, hope you guys enjoyed that. You got something out of it. I'll talk to you again next week. All the best, and bye for now.